Mark, a bit more calm in the markets. Do we take a break, take a breather? Is the worst behind us?
I don't think the worst behind us, and I think our breather, our pause will not last long. The slight rebound we've seen in assets is pretty minor compared to the moves we've seen this week. We saw US equities wipe out their gains for the year. They're up about 0.4% at the moment. Sure, we've seen JGB yields bounce, fall maybe 15 basis points. They're still up more than 25 basis points from where they were Friday, which is an extraordinary move for only a couple of sessions. Gold is going on a tear. So overall this week we're seeing big moves so far. We're waiting to see what happens in Davos. I am extremely worried. Now, it's in the context that it always pays to be very optimistic. Humans have evolved for self-preservation. We're resourceful, we're innovative. We generally find, positive solutions. Doom-mongers rarely survive long in markets. However, every so often we make mistakes. Now, the reason I'm worried at the moment is not because I ultimately think there's some dramatic doom-monger outcome. I think we will reach a perfectly happy diplomatic fudge ultimately. My worry is the moment, and I'm not the geopolitical expert, I'm more a markets expert, is I do not see any incentive for either side to compromise in the short term, which means I think it gets worse before it gets better. For politicians to compromise, they either need to believe in the compromise. I don't think the Europeans don't believe in giving away Greenland, and Trump seems to believe he deserves Greenland, or there needs to be political expediency to do so. And neither side has political expediency to compromise right now because the bullying has been so public. So I fear this is going to get a lot worse before it gets better.
OK, yes, the market negativity, I suppose, if that's any kind of feedback loop, was a lot more serious in April before positions changed. Is that something you look to, Mark, to get a sense of how this develops?
I think that's absolutely right. We had that comment out from Bob Michel overnight that that there's a message from Marcus to Trump. There's barely been a message so far. We've had a slight pullback, but U.S. stock markets globally are near record highs. For a proper message that the U.S. administration is going to hear, we need to see pullback in stock markets of 10, 15, 20%. So I think that ultimately, as I said, we'll probably reach a good solution. I don't think you should believe some of the worst scenarios that are being considered out there. They can't be ruled out entirely, but it's not the base case, but it's just the path there. And I struggle to see why, when everyone is being so complacent about it, how we immediately go to a happy, wonderful outcome, right now. That's in the context now that we have a very set timeline. We know that the major protagonists in this debate are going to be speaking on the agenda today. So we're expecting more confrontation to come very, very soon, and that must be the base case. So I'm expecting a dramatic more selling off, and it might ultimately be that sell-off that we see in stocks and in bond markets, and possibly the dollar, unfortunately fiat currencies generally, that might be the prompt for ultimately for us to reach a better solution. We need to see the markets paying first.
Yep. Mark, the clock stopped, but I'm going to carry on. It was really interesting just talking to Lawrence Mutkin. His view is yields go higher from here. Is Greenland the real threat for the market? Is the turbulence that we're seeing around Trump the real threat? Or is it the fact that actually we're running big deficits, the market's beginning to increasingly pay attention to that, yields are going to continue to move higher, we're out of the recent range on 10s, we're into a new one, maybe another one comes after that, yields go higher and higher, bond market volatility starts to increase. Isn't that where the threat to the current paradigm ultimately sits?
I don't think so. It's a very valid question and one I'm considering. So there's two aspects to the answer here. There's two different time spans. I think over a much longer period, the yields that we've seen in the last 15 years were anomalous and won't be the future. And so I think that structurally yields are going higher. I don't know whether we necessarily see them much higher in 2025. One of the mistakes I've made in the last few years, as you know, since 2021, I've been calling for much higher yields, is that, I always kept on thinking it's going to happen quicker than it's happened. And I realized this could play out over many years in the same way that the bull market in bond, lasted for 35, 40 years. So the bear market can play out very slowly. I think there's lots of things going to affect bond markets this year. I don't have a particular conviction on where that yields go. What he's talking about is term premia is going to return to markets, which I completely believe in. But I think that's going to be a slow-moving situation. It's going to be harder for stock prices. It's going to make people question stock price valuations more. But we're going to adjust to it slowly, and it's the slower kind of time-moving thing. The Greenland situation is potentially extremely problematic because, as I said, I think if you look at it from a market lens, it's likely that we only get a compromise after seeing economic markets pain first. And I'm not the geopolitical expert, and I don't want to go too far and speculate in that domain, but we are certainly in unprecedented terms in terms of challenging the business and trade relationship that has dominated for the last 70 or 80 years. And I think that that's happened in a way that people aren't really registering how potentially critical this is. So I think that is the much bigger drama right now. It is true that yesterday JGB's volatility was bonkers and was dominating, but that was just for the session. This week it is Greenland.
And it seems like one of the cleanest plays around that uncertainty, and that's been there, of course, for more than 12 months now, is gold. And we're seeing that again in the session, to your point, more than 4,800. It looks like we're closing in on 5,000. What assumptions are being made about the dollar in terms of pricing around gold market? What derails gold at this point?
I don't know what derails it. Actually, I do have an answer, Tom. There's nothing fundamentally, I think, that derails it. I think at some point, when we get extreme markets risk aversion, gold will sell off aggressively. In environments in the past, and we have two really good examples, the GFC and the pandemic, both were responded to by governments pumping money into the system. Easy monetary policy, just the best environments possible for gold. And ultimately, gold surged as a result of those policies, but not before collapsing first in the immediate risk aversion and deleveraging phase. And I think at some point we'll get markets risk aversion so extreme that precious metals collapse in the short term before then rebounding aggressively.